Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report from American Electric Power Company that details a massive play into a cleaner energy future. And let's just say they are betting big on it. So get ready because we are about to decode this filing and see what it really means for AEP and for us. We are going to break down what they are planning and why it matters. If you enjoy getting straight insights from these corporate documents, make sure you are subscribed. And hey, we have a community Discord channel linked in the description below where we chat about all things business. Alright, let's get straight into it. American Electric Power, or AEP as they are commonly known, has just filed a report that signals a significant investment in a new type of power generation. They are making a move into solid oxide fuel cells, which are essentially devices that produce electricity through a chemical reaction rather than burning fuel. Think of it as a cleaner, more efficient way to generate power. The big news here is that on the 4th of January 2026, an unregulated part of AEP signed an agreement to buy a large chunk of their option for these solid oxide fuel cells. This is for a new fuel cell generation facility they plan to build. And this isn't a small investment, folks. We are talking about an agreement worth approximately $2.65 billion. That is a serious amount of money being put on the table for this project. This facility is expected to be built near Cheyenne, Wyoming, and to make sure they have a buyer for all the power this new plant will generate. AEP also secured a 20-year agreement with a very reliable high investment grade customer. This customer will buy 100% of the electricity produced by the facility. Now, this offtake agreement, the deal to sell the power, does have some conditions that AEP expects to be met by the second quarter of 2026. But here is the important part. If those conditions are not met, AEP will be compensated for all the money they have spent and all the costs they have incurred so far. This sounds like they have a pretty strong safety net built into the deal. This filing is essentially an update on their strategic direction. AEP had previously disclosed in November 2024 that a subsidiary had signed an initial purchase agreement for 100 megawatts of these solid oxide fuel cells, with the option to acquire another 900 megawatts. What we are seeing now is them exercising a significant portion of that option. This move indicates a strong commitment to diversifying their energy portfolio and investing in technologies that are considered more environmentally friendly. While the exact details of the conditions for the offtake agreement are not fully laid out here, the fact that they are moving forward with such a substantial investment suggests they have a high degree of confidence in their ability to meet them. It is important to note that this is an unregulated subsidiary making this deal. This means the project may not be directly subject to the same kind of oversight or rate approvals from utility commissions that their traditional regulated power generation assets are. This can give them more flexibility in how they operate and finance these kinds of projects. The signatures at the end of the report, like David C. House signing as Assistant Secretary, simply confirm that the company has officially filed this information with the Securities and Exchange Commission. Now, let's think about what this all means. AEP is making a massive bet on fuel cell technology for large-scale power generation. This is a forward-thinking strategy aiming to tap into a cleaner energy future. The significant financial commitment and the long-term offtake agreement suggest a strong belief in the viability and profitability of this venture. From a financial perspective, while this filing is not a full financial statement like a 10K or 10Q, it signals a major capital allocation decision. The $2.65 billion price tag is a huge number and will undoubtedly impact AEP's balance sheet and future cash flows. Investors will be watching closely to see how this investment plays out. There are risks, of course. Technology can evolve and the economics of fuel cells might change. The conditions on the offtake agreement, although seemingly manageable with compensation if not met, are still a factor to monitor. However, securing a 20-year buyer for 100% of the output provides a significant degree of revenue certainty for the facility once it is operational. AEP's decision to invest so heavily in fuel cells is a clear signal of their long-term strategy. They are positioning themselves for a future where cleaner energy sources are not just preferable but essential. This diversification away from potentially more carbon-intensive generation methods could be a smart move for their future sustainability and profitability. Overall, this report tells a story of a major energy company making a bold move into a promising, albeit still developing, technology. It is a significant investment that reflects a commitment to innovation and a pivot towards a greener energy landscape. Alright, that is our breakdown of this AEP filing. What is your take on this massive fuel cell investment and what it signals for the company's future? Do you think this is a wise move for AEP? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings, and don't forget to check out our Discord community in the description. Thanks for watching. See you next time.